Now, let's look at the factor to consider having a segment report. First, factor to be considered is the nature of the business. The segment of entity to may engage in the business activity from which is may include expenses and earn revenue, which is also include the intercompany revenue and expenses. Topglove Corporation Berhad is an investment holding company which is engaged in the manufacturing and trading of the rubber glove. Topglove Berhad is operate in 3 principal geographical area around the world, and its primarily involve the rubber glove manufacturing industry. The second one is factor to be considered is existing of the managerial responsibility of activities. Each of the operating segments should have a manager that will take the responsibility in the ensuring the performance of company, and reviewing operating result is of the department of segment activity before it's being regularly reviewed by chief operating decision maker to make a decision. And the last one is the information provided to be board of director is also one of the factors to be considered having a segment reports. The company board of director are the one that will be assessing the overall performance and make decision about resources to be allocated to the segments. Basically, there are two types of segment, which is business segments and geographical segments. Business segment is distinguishable from an entity and it's involved in providing individual product or service or a group related products. It's subject to risk and return that different from other business segments. Topglove has no business segments technology. The crew is specifically involved in individual manufacturing industry. The second one is the geographical segment. It is a part of entity that is discriminated by the involvement in providing products, also issue with a particular economic environments and subject to risk and return that are different from those components operating in other economic environments. Topglove segmental report is separate according to 3 principal geographical areas, which is Malaysia, Thailand and China. Next, we will proceed to the chief of decision maker and its responsibility. So, our chief of decision maker is Tan Sri Dr. Lim Wee Chai, who is executive chairman and also the founder of the Topglove Corporation Berhad. He graduated from University Selangor, UNISA, University of Malaya and Seoul State University. And according to FAR570, operating segment CODM is responsibility to review the operating information and result of an entity to make decision regarding allocating of resources to segments. And CODM is also responsibility for making assessment on the performance of entity business units.
Reportable segments are business segments for which the information required by MFRS 8 are to be disclosed separately. In determining reportable segment, the management requires to do judgment. There is quantitative 10% threshold test and 75% revenue test. The 10% threshold test consists of 3, which is revenue basis, profit or loss basis, and asset basis, in which in these 3 tests it needs to reach 10% or more to be considered as reportable segment and to be disclosed separately. Topglove Berhad is using revenue basis in measuring its operating segment. It will be reported separately if the reported revenue, which are the sales to external customer and inter-segment sales, reach 10% or more of the combined revenue of all operating segments. After that, the entity required to do the 75% test of the total revenue of the entity should be accounted. If the total revenue is less than 75% of the entity's revenue, then the management shall identify additional segment as reportable segment. Based on the calculation of 10% threshold test on original segment revenue, there are only 2 reportable segments and 2 non-reportable segments. The operating segment of Malaysia and Thailand are the reportable segment that falls under 10% threshold test, result that 83% and 10% respectively. Meanwhile, China and others are not qualified as reportable segments because the result is not fall under 10% threshold test and will be combined as other segment. In order to meet the requirement for reportable segment and 3 non-reportable segment, Topglove Berhad came out with new segment revenue as stated on the screen. Based on the 10% threshold test, there are 4 reportable segments and consists of 3 new operating segments, consists of Malaysia, Philippines, Indonesia, and Japan. They are qualified for 4 reportable segments and qualified for 10% threshold test. Meanwhile, China, Thailand, and others are not qualified and classified as 3 non-reportable segments that are not qualified for 10% threshold test because the result is less than 10%. Next, for the reportable segment, they need to meet at least 75% external revenue. Based on this calculation, the external revenue for the Topglove is more than 75%, which result is 92.55%. For the comparison, the new segmented report using the adjustment of new operating segment, there will be a change in reportable status. As the calculation by using the revenue basis, there will be 4 reportable segments as the stated percentage are exceeding 10% of combined revenue of all operating segments in Topglove that comprise Malaysia, Philippines, Indonesia, and Japan of 42%, 15%, 24%, and 11% respectively. However, for the Thailand, China, and other segments will be reported as all other segments as they fail to meet the 10% threshold test requirement according to revenue basis. But somehow, Topglove believes that this information is non-reportable segments are significant to the use of financial statement since the company can choose to include Thailand, China, and other segments as reportable segment by applying the 75% threshold. Since 75% threshold has been satisfied by the Topglove of 92.55%, therefore they can safely ignore the Thailand, China, and other segments.
The basis of presentation of interim report. There are 2 bases of presentation to be chosen when a company want to prepare their interim report. There are integral method and discrete method. Integral method is the interim report is a fraction of the annual report and the annual value times with the fraction of the reporting period, while for discrete method is the interim report period is separate from the annual financial statement, and the financial report are prepared on a periodic basis such as on quarterly or half-yearly. Topglove chosen discrete method as the basis of its internal reporting, in which the financial statements are prepared quarterly. Period for the current and comparative of each statement prepared by the company according to FAR570 for interim reporting. The period for the current and comparative of each statement prepared by the company will be measured from 1st June 2021 to 31st August 2021. It is equivalent to the fourth interim quarter on the Topglove in 2020. As for the statement of financial position, current index of the reporting period is treatment from the 1st June 2021 to 31st August 2021, and then for the comparative support of the end of immediate visiting financial year reporting period is defined from 1st September 2019 to 31st August 2020. And then for the statement of profit and loss and other comprehensive income, current interim SOPL and SOTI of the analysis reporting period is 3 months from 1st June 2021 to 31st August 2021. The cumulative of the SOPL and SOTI from the current financial year to date reporting period is statement from 1st September 2020 to this 31 August 2021, and then the comparative of the SOPL and current interim report period is 3 months from 1st June 2020 to 31st August 2020. And then the last one for the comparative SOPL and SOTI immediately preceding financial year in adjustment from the 1st September 2019 to 31st August 2020. As for the statement of changes in equity and statement of cash flow, both of the statements have exactly the same reporting period and reporting date. Cumulative of statement of changes in equity and statement of cash flow for the current financial year to date is 12 months from 1st September 2020 to 31st August 2021. And for the comparative of statement of changes in equity and statement of cash flow immediately preceding financial year to date is defined from 1st September 2019 and to 31st August 2020.
So now we are moving on to the last part in this presentation, which we will make two adjustments by using the statement of financial position of the fourth quarter statement on 31st August 2021. So for the adjustment, first adjustment that we made is for the depreciation of the Topglove Berhad. On the 1st September 2020, Topglove Berhad's plant and equipment is costing of 2,466,000,000 with its accumulated depreciation as at 1st September 2020 amount to 1.005 billion. The company depreciates all of its plant and equipment on a straight line basis over the estimated useful life of the asset, which is 10 years. However, on the 1st June 2021, Topglove Berhad decided to dispose one of its equipment with a carrying amount of 300 billion with no profit. The equipment was initially purchased by the company on the 1st June 2019 at a cost of 500 million ringgit. So as per MFRS 116, the carrying amount of the plant and equipment will be presented in the statement of the financial position as at 31st August 2021 is 964,400,000. For the second adjustment that we made is the inventories. On the 1st September 2020, Topglove Berhad's account for inventories amounted to 994 million ringgit Malaysia. The net realizable value as at 28 February 2021, 31st May 2021 and 31st August 2021 were 900 million, 1.500 million and 900 million ringgit respectively. For the second quarter, which is on 28 February, the value of inventory should be written down to its net realizable value of 900 million in the statement of financial position, as it is lower than its cost of 994 million ringgit. The loss of inventories of 94 million ringgit should be recognized in the statement of profit or loss and other comprehensive income. For the financial year and in the third quarter, which is on 31st May 2021, the value of inventories should be reversed up to its cost of 994 million ringgit in the statement of financial position as it is lower compared to its net realizable value amounted to 1.500 million. The loss of inventories that was previously been recognized in statement of profit or loss and other comprehensive income in the second quarter should be reversed back in the third quarter of the statement of profit or loss and other comprehensive income. However, during the financial year and 31st August 2021 of the fourth quarter, the net realizable value of the inventories was lower as compared to its cost of 994 million ringgit. Hence, the value of inventories should be written down to its net realizable value of 900 million in the statement of financial position. The loss of inventories of 94 million ringgit Malaysia should be recognized in the statement of profit or loss and other comprehensive income. So here is the extract statement of financial position as at 31st August 2021 after adjustment. Uh, in order to record, we need based on two dates, which is current interim and comparative. For the current interim, we refer to first quarter, which the date start with 1st June 2021 until 31st August 2021. For comparative, we use the statement of financial position date as at 31st August, which started date at 1st September 2019 until 31st August 2020. So that's all for the presentation. Thank you for listening.